Hello and welcome back to JoshDeLozierInvestments. Today we're talking about bonds and go over a few key different types of bonds in today's video. First, we'll go over what is a bond. At its core, a bond is a loan, but here you're the lender. When you buy a bond, you're lending money to the government, corporation, or municipality. In return, they promise to pay money back in the future. We'll take a quick look at a few reasons why you should invest in bonds. First, bonds usually offer steady, predictable income through interest payments, making them popular for retirees. Second, compared to stocks, many bonds are less volatile and provide downside protection, especially during market downturns. They're a great way to diversify. Also, municipal bonds offer potential tax advantages. The interest might be exempt from federal and even state and local taxes in your particular area. We can go over a few different types of bonds. There's government bonds, corporate bonds, agency bonds, specialty bonds. The first one we're going to go over, government bonds, are issued by the Treasury or local governments. Like, for example, the U.S. Treasury bonds. I think they offer 4% currently. It's really safe investment, very low risk. So next we'll go over the next type, corporate bonds. Companies borrow from you, higher risk than government bonds, but generally offer higher yields. Within these, there are investment grade or safer. There's high yield or junk bonds. They pay more but are much more risky. The next type of bonds are agency bonds, issued by the government-sponsored entities like Fannie Mae. They usually offer a bit more yield than treasuries with slightly higher risk. Also, there's specialty bonds. There are also zero coupon bonds, which pay no periodic interest, but are bought at a discount. Convertible bonds, which can be turned into stock, and green bonds, used for environmental projects. Let's take a quick look at how bonds work. Let's say you buy $1,000 in a government bond with a 5% coupon and a 10-year maturity. Every year you'll get $50 in interest, usually paid in two $25 installments. At the end of the 10 years, you'll get your $1,000 back, unless you decide to sell early. Bonds can also be bought and sold on the secondary market, where prices fluctuate as market interest rates change and as the issuer's credit changes. A lot of this has to do, depends on the yield curve. You can look to see roughly what you can make on a bond over time. Also, we quick look at bond risk. Bonds aren't risk-free. There's an interest rate risk. When rates go up, bond prices go down. If you sell before maturity, you could lose money. There's default and credit risk. The issuer might fail to make payments. The government bonds are safer than corporate bonds in this particular comparison. There's also inflation risk, reinvestment risk, and liquidity risk to consider. The inflation risk, you've got fixed payments can lose value if inflation rises. As far as reinvestment risk, when bonds mature or are called early, you may have to reinvest at lower rates. And finally, liquidity risk. Some bonds are hard to sell quickly without losing money. And just as I mentioned before, if you look at the yield curve, you can roughly see what a bond is expected to make over the 10 years, and you can get a better deal. You always want to buy you want to buy at the right time, just like with anything else. Timing is very important. And we look at how to invest in bonds. You can invest in bonds directly. You can purchase individual bonds through a broker or government website, or indirectly via bond, mutual funds, or ETFs, which offer diversification. As with any investment, make sure you do your own due diligence, and everyone has their own risk tolerance. So, make sure you do your own homework. The more time you spend, looking into an investment, the greater returns you're going to make off your investment. Really, doing the homework and all the critical research is key to being profitable long term. That's the main objective. Government bonds are debt securities issued by national, state, and local governments to finance public spending or obligations. When you buy a government bond, you're essentially lending money to the government, which agrees to pay you periodic interest, which are coupon payments, and return your principal at maturity. In the U.S., the most well-known are government bonds. We just went over, the treasury bills and municipal bonds. And this right here is a much safer way, more conservative investors, retirees especially when they're older, should consider bonds, and that way you have fixed income coming in. And there's not as much volatility there as there would be if you own, some of these stocks in the stock market that you see all these large gains with Nvidia, Tesla. Great long-term investments and are the way to go long-term. But if you've got to have fixed income, or if you're a retiree, later in life, sometimes it's safer just, you really can't afford the extra risk and couldn't really afford a market recession like if you were younger, if you were in your 20s, 30s, or 40s even. But really, once someone's a pensioner, it's time to, a lot of times they need fixed income and can't take on that extra risk. So bonds are an excellent way to go. I appreciate everyone watching the video this week. Please hit the like and subscribe, and we'll continue to make more educational videos next week. We'll be covering a new topic, finance related. Also, in the comments below, you can click on the referral link and get a free stock from Webull, as well as $15 worth of cryptocurrency from Coinbase. So be sure to add those add those links, and there's free money right there just by linking those to your bank account. Coinbase is a great way to go for learn and earn, and Webull's the best brokerage to have far and away, just because it offers pre-market trading between 4 a.m. and 7 a.m. So it gives you an edge over the other brokerages. Also, if you'd like a free consultation, feel free to go to JoshDeLozierInvestments and contact us. We'll be more than happy to give free advice on any investments that you may have any questions on. Appreciate you all watching the video. I hope everyone has an amazing weekend. I'll see you all back here next week.